Hi guys, it's Mrs. Simonson, and we're continuing on in our accounting book with Chapter 9, which talks about doing financial statements for a service business sole proprietorship. So that's what we're going to focus on today. The big concept here is that financial statements are done to provide information to allow businesses to make good decisions. And we're going to talk about the income statement, which is a statement that shows us the net income or the net loss. The second statement that we're going to look at is called the statement of change in owner's equity. And it shows us what happens to the owner's capital account during the period, whatever the business is using. And then the balance sheet tells us the financial position of the business at a specific point in time. The book also talks a little bit about a cash flow statement, but we don't actually do one. So we're going to jump into the first section, 9-1, which is the income statement. This section first just summarizes that the financial statements are needed so that we can make decisions moving forward. And creating the financial statements is the seventh step in the accounting cycle. So we just ended last chapter with creating the worksheet that kind of sets us up to do our statements and figures out the net income or net loss. And now in this step, we're going to formally create the financial statements. So most businesses, all businesses, do an income statement and a balance sheet. And then two other statements that they might or might not do are the statement of change in owner's equity and a cash flow statement. So we're going to start and look at the income statement. So the income statement is reporting whether the company has a net income or a net loss. We know the equation for that is revenue minus expenses. Sometimes this is called a profit and loss statement or an earnings statement. Some businesses use those names instead of the income statement. But as far as GAAP is concerned, an income statement is revenue minus expenses. So the income statement has four sections. It has the heading, like all statements. It has a revenue section, the expense section, and whether we had a net income or a net loss. So we're going to look at the heading. It's who, what, when, like usual. The name of the business is who, what is the income statement, and when is for whatever the period is ending the last month. And the date is important because income statements are something that you can compare from accounting period to accounting period. So you need to be very specific in that. What did you use? Is this for the quarter ended, for the month ended, and so forth? So it's not a date, it's for a time period. So be sure and include that. We are going to use the worksheet as the information to create the income statement. And for every one of these statements, you use a different type of information. So income statement is the first one you prepare. That's why it's the first two columns here. And I would say it's the easiest to prepare. So I'm going to click on this to make this a little bit bigger, a little bit easier to see. So we recorded our heading, and then we're going to, on the very first line, we're going to write the word revenue, and we're going to indent, and we're going to write our revenue accounts. And since Zip Delivery Service only has one revenue account, we're just going to write it. And then a really important thing on financial statements is this is no longer the debit side and the credit side. So debit's on the left, credit's on the right. Crazy song. This now is a subtotal on the left and a total on the right for all financial statements. So not just one, make it confusing, it's everyone. So since we only have one revenue account, it would go on the total side. And I'm going to show you an example of how that would be different in a second. Then we're going to list the word expenses, and we're going to indent and list all of our expenses. And we know we're going to always have more than one expense. So that for sure would be in the subtotal. So advertising, maintenance, rent, and utilities. We draw a line under that, meaning we're going to have a total. And then we indent here, we write total expenses, and we put it to the right because now this is a total. So this would be a formula, auto sum of these four. We're going to then draw a line here, meaning we're going to have another equation. And we're going to, I'm sorry, and where did I get all this information? I got all of this from the income statement, from the worksheet, sorry. Okay, so here was my amount for revenue. Here are my amounts for net income. This number right here should match this number. Now, I would not just write the number down. I would actually do the formula so that I'm sure that I don't have a typo anywhere. I'm then going to write net income on the far left, and I'm going to come over here and do a new formula of revenue minus expenses. Obviously, this number right here should match up with this number right here. And then we have our double line saying nothing's going to come below that. So going back to the book, here's an example where a company had multiple revenues, which is probably more accurate. So in this case, they still write the word revenue on the left, and they indent and they rate their different types of revenue. Since they have multiple revenues, it's going to go in the subtotal column. They're then going to indent and write total revenue and add those two up. So just like you see here for expenses and total expenses, you could have the same for revenue. We don't do that here. Like we don't say delivery revenue and then total revenue because it's the same thing. They're only one account. But then when you have multiples like this, you would have a total revenue account line. And then the last thing in this little section here is how does it look if you have a net loss? So it's basically the same. We have our revenue, we have our expenses, our total expenses, and then we're going to write the word net loss. And we're going to write the amount. Now you just want to go backwards on your equation. You want to subtract expenses from revenue because you never, ever, ever have a negative number in accounting. So if you did if you did revenue minus expenses, you'd have a negative number, and that's not good. So it's just a positive net loss. So that's it for the income statement.